Hi, I'm Tom Lydon, editor of ETF Trends here in Chicago at the Morningstar ETF Conference. And I'm here with Jeremy Held, who's Director of Investment Strategy and Research for ALPS. Jeremy, great to see you.
Hey, great to see you too, Tom. Thanks for having me.
You folks are very innovative in all different types of strategies, but we're there early regarding Master Limited Partnership ETFs or MLPs. Great run, but the bloom's kind of fallen off the rose a little bit. Let's talk about MLPs and the state of MLPs right now.
Yeah, obviously energy has been a really challenging environment over the last year, and MLPs have not been immune. You've seen the whole sector, from the oil and gas companies to the integrated companies to MLPs, really suffer. And while we think that it's been tough in the near term, we think that MLPs are such an important part of energy infrastructure, national energy security, that we think for the long-term investor, if you can stay the course, there's a lot of benefits to the asset class.
Well, there are a lot of advisors and investors that were looking at it, never put their toe in the water. Now with the discounts in place, might be, especially with the attractive yields.
Right.
Give us an idea.
Yeah, right now we're
yields.
looking at, the yield on the Alerian MLP index is about 9%. To put that in perspective, we haven't seen that since the middle of 2009. And obviously it's been a tough environment. We're seeing a lot of people say, hey, this is an asset class we've wanted to buy for a long time. At these levels, we think it could be very attractive.
Well, especially you look at the risk in treasuries with the threat of rising rates, and how a lot of folks are saying, hey, you need to shorten up on your duration. A little bit of that can really offset kind of these dreadfully low yields that we're seeing in the treasury markets, right?
And what you're seeing with MLPs is it's not just the absolute level of the yield, but it's actually the consistency and stability of it. This is an index that hasn't had distribution cuts in 20 years. So we think that not only is it an attractive time to get in, but that stability of that income that's based on our consumption of energy, we think is something that's going to last for a long time.
So let's lift up the hood for a little bit and talk about the MLP structure and what it's all about, and really based on where we are as a country, where most of these MLPs come from, what's the makeup?
Yeah, I mean, basically, at its core, these are toll road businesses that take natural gas and crude oil and they transport it from point A to point B. And that delivers historically very stable cash flows. What the market pays for those cash flows is going to vary over time, just as it will with any asset class. But it's the stability of that business model that I think is at the heart of the investment story for MLPs.
And as we're moving to be more of a self-sustaining country regarding energy, are we going to continue to see more build out in those spaces?
I think we will. I mean, the energy infrastructure story, what's been happening in North America from North Dakota to Texas to Pennsylvania, has been a big part of the MLP story over the last few years. How that's going to play out over the next few years, nobody knows, but I think that's also a big part of the future growth potential.
Right. So the ticker symbol again, AMLP?
That's right, AMLP.
And the yield right now about 9%?
Yeah, it's about 9%.
Great. Jeremy, thanks for being here.
All right.
Appreciate it.
Yep, thanks for having me.